Hey guys, how's it going? Welcome to my YouTube channel once again. And in this video, I want to cover some important details of why am I trading CFDs. And I'm really not giving shit about futures at all. CFDs is really what I'm sticking with, and also why it could be a better option for you. Well, what is CFDs? CFDs are the contract for difference for a given financial instrument. And of course, it is comparable with a different asset class or a different instrument category called futures. It has been quite noticeable that in the past years in the industry, futures itself as a different category of trading, or so to say, some people kind of advertise it as a better option for trading instead of CFDs. I do not really see that as a good option, and personally I do not see it as a better option, because CFDs are of course just a much more transparent instrument you could be trading, and in my opinion futures is really just the worst option you could be going with. Why would I be saying that CFDs are a better option than futures? Well, let's just first start with how all of this has been all advertised to the retail traders. What has been heavily advertised to traders is futures is allegedly better because it's more regulated. And other than that, we haven't really heard any sort of better argument of why it would be better. However, I can tell you, CFDs are just as much regulated, even more regulated than futures, because CFDs are regulated across globally in several different jurisdictions, and very often futures is only regulated by the country that it is provided from. I'm gonna touch base on that a bit later. But let's just speak of the main significant difference that is really the big deal breaker for me of why am I choosing CFDs. CFDs is a decentralized market. Futures is a centralized market. And what that means is the pricing data you're getting on a futures market is going to be given by one single pricing provider, because it is of course a centralized pricing, and the actual pricing data is coming from one single pricing provider. While the CFDs are of course decentralized, so what that means is every provider can have a bit different pricing, of course, because it's decentralized. Like the way you have to imagine CFDs is if you would be going to any major city in the world and you would be going to a currency exchange booth, you would see that one currency exchange office is having one certain pricing. You go two streets down the line, you see another currency exchange office giving a different pricing. You walk 2 minutes down in a city once again, and you see a third different pricing for the same currency, and of course the same exchange, just a different exchange rate between two different currencies. So that of course makes it decentralized, and due to the nature of being decentralized, pricing providers and different providers in the market can give you slightly different pricing options. And in reality, this is of course what makes it more transparent, the fact that it is being decentralized. And because it's decentralized, why would it be more transparent, and how is CFDs a much better, more accurate pricing? It all comes down to the fact that when there's a CFD broker, the pricing data that is given to you for trading by the CFD broker, it is usually aggregated and connected from 15-20 different banks and liquidity providers, all of them giving their own pricing. But of course, you kind of gotta imagine it. The pricing difference is of course very minimal. However, for you as the end user, the main point here is the broker that is providing you the pricing, in terms of a CFD broker giving you the pricing, that is going to be aggregated and connected together from 15 different banks, or 15-20 different banks, depending on how many banks and liquidity provider the broker is partnered with. But of course, it is going to be an aggregated price. So all of the different prices are put together into one single pricing stream, and that one single average pricing data is going to be given to you as the end user, you trading the market. So it is a pulled together pricing, giving you an average data of the price and resulting in the most accurate pricing ever. And in contrary, if you're trading on a futures broker, that futures broker is only capable of providing pricing data from one single provider, and that is, of course, the exchange. And why would this be important? Because if you're having, in the first place, you're having one single pricing provider on a futures market, that is all subject to how that single provider is deciding to manipulate the market. If that one single entity is making any sort of market manipulation, that's what's going to be happening on your chart. However, due to on the CFD side, a bunch of different liquidity providers competing against each other, they all have to be providing the best possible pricing to be competitive against a different liquidity provider. So because there's a competitiveness between the liquidity providers and also the banks trying to provide the most transparent and the best pricing for the end user, there's just going to be very minimal market manipulation, or even almost no market manipulations, because of course these liquidity providers and different pricing providers aggregated into one single pricing feed on the CFD side, they just cannot afford themselves the market manipulation nature, because they are just unable to manipulate the markets because it would be immediately noticeable. And of course, if something is noticed immediately in comparison to a different pricing provider, of course it would be hurting the reputation of that single liquidity provider's pricing, and it would be noticeable in just a couple of minutes that a provider is manipulating the markets. So in itself, it just becomes much more transparent due to the competitiveness between different providers. And moving forward with this competitiveness of transparency, I mean the competitiveness itself building the transparency, you're also going to be understanding that, let's say there are different CFD brokers, and as we perfectly understand, CFD brokers do have the ability to manipulate the markets on their own, because of course the market is decentralized. So that being said, the broker itself may add some artificial market manipulation to the end user, and this is exactly what makes it once again much more transparent on the CFD side, because if you're having multiple CFD providers lined up one after the other, and you start comparing the pricing data of all of them, you're gonna notice in just a blink of an eye that one provider, a broker, is manipulating your charts and the other broker is not manipulating your charts, which is of course very much noticeable in comparison with different broker providers. And it just becomes a much more cleaner pricing due to the aggregation and of course the competitiveness, and of course, like I mentioned, for you as the end user, you're really able to identify any sort of market manipulation you're facing, so you can immediately know that which broker is better and which broker is worse. Let's speak of some other things here which does make CFDs a much better option, and why end of the day I'm choosing CFDs is the trading hours. Very often futures market is subject to the opening times of the exchange. However, CFDs, it's a global market. You can trade it pretty much 24/5 when the market is open, all sessions, all 24 hours of the day, and it's much more flexible for trading hours. Speaking of flexibility, we can also bring up the leverage difference as a better option. On the CFD brokerages, very often you're easily getting above 1-to-100 or 1-to-500 leverage, for example, or even higher in some cases. However, unfortunately, on the future side, which is at least not my problem, you're getting like 1-to-20. So the leverage difference is also massive. And if you're a trader who's actively trading, you're gonna of course understand how big of a difference is having a bigger leverage. Bigger leverage, the easier you're able to trade, because you're not required to be using almost all of your capital to be opening a single position. So you're able to open more positions and of course have a bit more flexibility with your trading with higher leverage. And that higher leverage is only available on the CFD brokerages. Also, let's revert all the way back to the transparency side a bit. So as I mentioned, futures market is going to be controlled by one single entity. And why is it problematic when that one single entity is controlling the market? As you may know, market is constantly against you, and that one single entity acting like everything would be fully transparent, in reality that one single entity controlling that single pricing is of course the exact individual who's actually manipulating your trades. So end of the day, is the main reason why I'm staying away from futures. And you can even imagine that these exchanges are all working hand in hand together with the government, and all of these things are controlled in one single connected hub. Like, I can bring up, for example, that recent case when there was a bunch of manipulations of the market by Trump. Like, you probably also seen them bragging about making 2.5 billion in a day, and the other guy made like 900 million in a day, and that was of course manipulated by that government entity itself. So doesn't matter how much you want to trust your government, the manipulation is coming from the highest levels, and they are coming to get you. And of course that all goes back to the CFDs. Once again, the argument is very easy. It's really just making sure that the pricing data is more transparent. There's literally to no manipulation on the CFD side, and of course if there would be any manipulation, you would be immediately able to spot it, while you're unable to spot it on the different market. And yeah, as a quick summary, this would definitely be summarizing why am I choosing CFDs. It just is much better, smarter option, and I'm gonna continue sticking with CFDs simply because there's no good argument to be changing from CFDs.
It's not just a company, it's actually an individual. And he made 2.5 billion today, and he made 900 million. That's not bad, because he's a financial.